Welcome to an eye-opening journey into the secret business strategies of Warren Buffett, the Oracle of Omaha. Get ready to uncover the methods that have made him one of the wealthiest individuals on the planet. Stop right there! Are you making these costly business mistakes? If you're not using Warren Buffett's billionaire strategies, you're probably losing money right now. And here's the shocking part. Most people fail in investing because they ignore these simple but powerful rules. Are you making these same mistakes? Let's find out. Warren Buffett's business secrets revealed. Stay tuned as we delve into the principles that can transform your financial future. In times of market turmoil, while others panic, Warren Buffett remains a picture of calm. One of Buffett's core principles is to invest in businesses you understand. A big mistake many make is investing in complicated businesses they don't fully grasp. Buffett's rule is simple. If you don't understand it, don't buy it. For instance, he avoided tech stocks for years, but invested in Coca-Cola back in 1988 because he understood its global dominance. That investment is now worth billions. The key lesson here is to not follow trends but to invest where you have knowledge. Focus on long-term value. Hot stocks might crash tomorrow, but great businesses grow over time. For example, Buffett has held American Express and Coca-Cola for over 30 years, collecting millions in dividends while others panic sold. Quick warning. Are you buying and selling too fast? Buffett says, the stock market is designed to transfer money from the impatient to the patient. Buy businesses at a discount. Fear makes people sell stocks cheap. That's when Buffett buys. For example, during the 2008 crash, banks were collapsing. Buffett invested in Goldman Sachs while others panicked. Years later, he made billions. Lesson: buy when there's blood in the streets. Are you panicking or profiting? Invest in high-quality companies. Buffett only buys companies with strong brands like Apple and Coca-Cola, loyal customers, and a competitive advantage, also known as an economic moat. For example, he bet big on Apple because of its strong ecosystem and repeat customers. Now, his Apple stock is worth over $100 billion. Lesson: invest in brands people can't live without. Warren Buffett wasn't born a billionaire. His journey began in Omaha, Nebraska, where he was born in 1930. From a young age, he showed a keen interest in business and investing. At the age of 11, he bought his first stock, 3 shares of City Service Preferred, for himself, and 3 for his sister. Even at that tender age, Buffett demonstrated patience and a long-term perspective, traits that would define his future success. Buffett's father, Howard, was a stockbroker and later a U.S. congressman, providing Warren with early exposure to the world of finance. Encouraged by his father, Warren would often visit the office and read books on investing. This early immersion laid the foundation for his financial acumen. Warren's education further honed his skills. He attended the University of Nebraska, where he completed his degree in business administration. But it was at Columbia Business School where he met his mentor, Benjamin Graham, the father of value investing. Graham's teachings profoundly impacted Buffett, shaping his investment philosophy and guiding his future decisions. Buffett's early ventures included a pinball machine business and a paper route, demonstrating his entrepreneurial spirit. These experiences not only earned him money, but also valuable lessons in business operations and customer service. The combination of a supportive upbringing, a solid education, and hands-on business experience set the stage for Warren Buffett's future success. His journey reminds us that great investors are made, not born. Remember, the roots of his incredible achievements lie in the lessons learned during his formative years. Take a page from Buffett's book. Start early, stay curious, and never stop learning. Warren Buffett's early investments were pivotal in shaping his future success. Among his first significant ventures was the purchase of a failing textile company, Berkshire Hathaway, in 1962. Initially, it seemed like a poor choice, but Buffett saw beyond the surface. He used Berkshire as a vehicle to acquire other businesses, turning it into one of the most successful conglomerates in history. Buffett also made a notable investment in American Express during the salad oil scandal of the 1960s. While others panicked, Buffett recognized the company's underlying strength and bought shares at a discount. This decision not only yielded substantial returns but also reinforced his belief in buying quality businesses at a bargain. Another early investment was in Geico, a company he discovered through his mentor Benjamin Graham. Recognizing its potential, Buffett invested heavily, which later became one of his most profitable ventures. These early investments taught Buffett crucial lessons: the importance of patience, the value of buying quality businesses at a discount, and the power of holding on to great companies for the long term. By studying Buffett's first major investments, we learn that success in investing isn't about quick wins, but about making informed, strategic decisions and staying the course. These foundational experiences set the stage for Buffett's legendary career and provide timeless lessons for any aspiring investor. Warren Buffett's journey with Berkshire Hathaway is nothing short of legendary. It all began in 1962 when Buffett noticed a struggling textile company. At first glance, it seemed like an unusual choice for an investment. But Buffett saw potential where others saw failure. He gradually acquired shares, eventually taking control of the company. Once at the helm, Buffett didn't just focus on textiles. Instead, he used Berkshire Hathaway as a vehicle to acquire a diverse range of businesses. His strategy was simple yet profound: invest in high-quality companies with strong management and solid financials. One of the key acquisitions that marked Berkshire Hathaway's transformation was the purchase of National Indemnity in 1967. This move signaled Buffett's entry into the insurance business, a sector that would become the backbone of Berkshire's growth. Insurance provided a steady stream of cash, allowing Buffett to make further investments without incurring debt. Over the years, Buffett's keen eye for value led him to acquire companies like See's Candies, The Washington Post, and Geico. Each acquisition was meticulously chosen for its long-term potential and strong management. By reinvesting the profits from these businesses, Buffett built a powerhouse conglomerate. But it wasn't just about buying companies. Buffett's strategy also involved nurturing these businesses, allowing them to operate independently while providing them with the resources they needed to grow. This hands-off approach fostered innovation and efficiency, driving Berkshire Hathaway's success. Today, Berkshire Hathaway is a multi-billion-dollar conglomerate with interests in a wide array of industries, from insurance and utilities to railroads and consumer goods. It stands as a testament to Buffett's vision, patience, and unwavering commitment to value investing. By studying the formation of Berkshire Hathaway, we learn that true success in business and investing comes from seeing potential where others do not, making strategic decisions, and nurturing growth over the long term. Warren Buffett's journey with Berkshire Hathaway is a masterclass in turning vision into reality. While Warren Buffett is renowned for his investment acumen, his commitment to philanthropy is equally remarkable. In 2006, Buffett made a pledge that stunned the world. He announced plans to donate the majority of his wealth to charitable causes. This monumental decision was driven by his belief that those with great wealth have a moral obligation to give back. Buffett's philanthropic journey began with his partnership with the Bill and Melinda Gates Foundation. He vowed to gradually transfer shares of Berkshire Hathaway to the foundation, making it one of the largest charitable donations in history. But Buffett didn't stop there. He also established the Giving Pledge alongside Bill Gates, encouraging other billionaires to commit at least half of their wealth to philanthropy. Buffett's approach to giving is as strategic as his investing. He focuses on areas where he can make the most significant impact, such as global health, education, and poverty alleviation. His donations are carefully considered, ensuring that the funds are used effectively to create lasting change. One of Buffett's most notable contributions is his support for education. He has funded numerous scholarships and educational initiatives, believing that access to quality education is a key driver of social mobility. Additionally, his contributions to global health have helped combat diseases and improve healthcare infrastructure in some of the world's poorest regions. Buffett's philanthropy extends beyond financial contributions. He actively encourages others to give and leads by example. His humility and dedication to making the world a better place have inspired countless others to follow in his footsteps. Warren Buffett's philanthropic efforts remind us that true success isn't just about accumulating wealth. It's about using that wealth to make a positive difference in the world. His legacy will not only be measured by his business achievements but by the lives he has touched and the lasting impact of his generosity. As we reflect on Buffett's journey, let's remember the power of giving and the profound impact it can have. Whether through time, resources, or influence, each of us has the potential to contribute to a better world. Warren Buffett's investment philosophy is a masterclass in simplicity and wisdom. One of the cornerstones of his approach is value investing. This involves identifying undervalued companies with strong fundamentals and holding on to them for the long term. Buffett believes in buying stocks as if he were purchasing the entire business, and this mindset has guided his investment decisions for decades. Another key aspect of Buffett's philosophy is long-term thinking. Unlike many investors who seek quick profits, Buffett is patient and disciplined. He understands that real wealth is built over time, and he is willing to wait for the right opportunities. This patience allows him to remain calm during market fluctuations and make rational decisions when others might panic. Buffett also emphasizes the importance of thorough research and understanding what you invest in. He famously advises investing within your circle of competence, focusing on industries and businesses you truly understand. This approach reduces risk and increases the likelihood of making sound investment choices. Moreover, Buffett's philosophy includes a strong focus on the quality of management. He looks for companies with competent and ethical leaders who have a proven track record of success. Buffett believes that good management can drive a company's long-term growth and sustainability. Finally, Buffett's approach is grounded in discipline. He avoids speculation and trends, sticking to his principles even when they are out of favor. This discipline has helped him navigate through various market cycles and emerge successfully. In essence, Warren Buffett's investment philosophy is about finding value, thinking long-term, doing your homework, and maintaining discipline. These timeless principles have not only made him one of the wealthiest individuals in the world, but also a beacon of wisdom for investors everywhere. As you embark on your investment journey, remember these lessons from the Oracle of Omaha, and you too can build lasting wealth. As we delve deeper into the wisdom of Warren Buffett, it's impossible to overlook his invaluable advice to young investors, those who are just beginning their financial journey. Buffett's guidance is simple yet profound, and it can set the foundation for a lifetime of successful investing. Firstly, Buffett emphasizes the importance of starting early. He often says, "The best time to plant a tree was 20 years ago. The second best time is now." By investing early, young investors can take advantage of the power of compounding, where their investments grow exponentially over time. Even small amounts invested consistently can yield substantial returns in the long run. Secondly, Buffett advises young investors to educate themselves. He believes that knowledge is the best investment you can make. Reading extensively about business, economics, and different industries can provide a solid foundation for making informed investment decisions. Buffett himself is an avid reader, dedicating hours each day to learning and staying informed. Another crucial piece of advice is to invest in what you understand. Buffett warns against following the crowd or investing in trends you don't fully grasp. Instead, he suggests focusing on industries and companies that you have a genuine interest in and knowledge about. This approach reduces risk and increases the likelihood of making sound investment choices. Buffett also stresses the importance of patience. The stock market can be volatile and it's easy to get caught up in short-term fluctuations. However, Buffett advocates for a long-term perspective. He believes that real wealth is built over time and that patience is a key virtue for any successful investor. Moreover, Buffett encourages young investors to stay disciplined. Avoid the temptation to speculate or chase after the latest hot stock. Instead, stick to your investment principles and remain focused on your long-term goals. Discipline can help you navigate through various market conditions and emerge stronger. Finally, Buffett advises young investors to be mindful of their spending and to live below their means. Financial success is not just about making wise investments, but also about managing your money prudently. By saving and investing wisely, young investors can build a secure financial future. In summary, Warren Buffett's advice to young investors is to start early, educate yourself, invest in what you understand, be patient, stay disciplined, and live below your means. These timeless principles can guide you on your path to financial success and help you build lasting wealth. As we draw closer to the end of our journey through Warren Buffett's extraordinary life and investment wisdom, let's take a moment to reflect on some of his most memorable quotes and the profound lessons they impart. Rule No. 1, never lose money. Rule No. 2, never forget Rule No. 1". This quote encapsulates Buffett's conservative approach to investing. It's a reminder that protecting your capital should always be a top priority. Price is what you pay, value is what you get. Buffett constantly emphasizes the importance of understanding the intrinsic value of an investment, rather than being swayed by its market price. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Here, Buffett highlights the importance of quality over quantity. Investing in high-quality companies, even at a fair price, is often more rewarding in the long run. The stock market is designed to transfer money from the active to the patient. Patience is a cornerstone of Buffett's investment philosophy. He believes that those who stay calm and patient through market volatility are the ones who ultimately succeed. Someone's sitting in the shade today because someone planted a tree a long time ago. This quote beautifully illustrates the power of long-term investing. The benefits we reap today are often the result of wise decisions made years ago. Be fearful when others are greedy and greedy when others are fearful. This famous quote underscores Buffett's contrarian approach. He advises investors to take advantage of market opportunities that arise when others are driven by fear or greed. The best investment you can make is in yourself. Buffett believes that personal development and continuous learning are the most valuable investments one can make. Knowledge and skills compound over time, just like financial investments. Risk comes from not knowing what you're doing. Education and understanding are key to reducing investment risk. Buffett advocates for thorough research and knowledge before making any investment decisions. These quotes are more than just words, they are guiding principles that have shaped Warren Buffett's remarkable career and life. By internalizing these lessons, we can all become better investors, and perhaps, better individuals. So which Buffett quote resonates with you the most? Let us know in the comments below. And remember, the wisdom of Warren Buffett isn't just for admiration, it's for action. Stay tuned for our final thoughts and a powerful call to action that could change your financial future forever. As we look to the future, what lies ahead for Berkshire Hathaway and Warren Buffett's enduring legacy? With Buffett now in his 90s, the world is keenly watching how the company will navigate the inevitable transition of leadership. Berkshire Hathaway is more than a company. It's an institution built on decades of Buffett's investment acumen and ethical business practices. The challenge for the future leadership will be to uphold these values while steering the company through an ever-changing economic landscape. Potential challenges include adapting to rapid technological advancements and maintaining the conglomerate's reputation in a more socially conscious world. Will Berkshire Hathaway continue to avoid speculative investments like Bitcoin, or will new leadership be tempted to explore these volatile markets? On the other hand, opportunities abound. The company's vast cash reserves provide a cushion to weather economic downturns and seize new investment opportunities. Furthermore, the diversification of Berkshire Hathaway's portfolio, from insurance to utilities to consumer goods, offers a robust foundation for future growth. The question remains, can the new leadership maintain Buffett's disciplined investment strategy and long-term vision? Will they continue to invest in high-quality companies and avoid the pitfalls of market speculation? Only time will tell. One thing is certain, Warren Buffett's legacy will continue to influence investors and business leaders for generations to come. So, what are your thoughts on the future of Berkshire Hathaway? Drop your predictions in the comments below. And as always, remember that the best investment you can make is in yourself. Stay tuned as we wrap up with a powerful call to action that could change your financial future forever. Avoid debt and leverage. Debt destroys businesses. Buffett avoids risky loans and buys companies with strong balance sheets. For example, Berkshire Hathaway runs on low debt. While other businesses struggle in recessions, Buffett's company stays strong. Tip: don't take unnecessary loans just to invest. Only risk what you can afford. Be patient and disciplined. Market crash? Buffett doesn't panic, he sees opportunity. For example, in the 2020 COVID crash, people sold stocks in fear. Buffett, he held strong, and made billions when the market rebounded. Lesson: be fearful when others are greedy, and greedy when others are fearful. Reinvent and adapt. Buffett avoided tech for years, but he changed. For example, he finally invested in Apple when he saw its real-world value. That one change made him billions. Tip: if Buffett can change his mind, so can you. Learn and adapt. Invest in people, not just businesses. Buffett bets on smart leadership. A good CEO can make or break a company. For example, he invested in Geico because of its great management, and turned it into a huge success. Lesson: great leaders equal great companies. Look at who's running the business. Avoid market speculation. Stop chasing hot stocks and trends. For example, Buffett never invested in Bitcoin or meme stocks like GameStop. Why? Because they're based on hype, not real value. Lesson: Don't gamble. Invest in things that last. Keep it simple. Too many people overcomplicate investing. Buffett's rule? Keep it simple. For example, instead of complex day trading, Buffett buys great companies and holds. That's it. Final lesson. The stock market is simple, but not easy. Stick to what works. Now, here's the real question. Will you act on these billionaire secrets or just keep scrolling? Comment Buffett if you're ready to build real wealth. The best investment book link in the description order. Now like and share so others stop making these costly mistakes. Final words. Success starts now. Your financial freedom starts now. Don't just watch. Take action.